Hello traders, Joseph here again. Thank you so much for joining me on this week's edition of my Forex market preview. I've decided to do something a little different in this week's Forex market preview. So what I'm going to do is I'm going to show you guys a little tutorial at the start, and hopefully this is going to help a lot of you guys, because this is what you need. Sometimes, and if you're trading the Forex market, you need to have an edge in order to be successful. And that edge is very, very important. So this is what I'm hoping to give you with this tutorial. So I'm gonna talk a little bit about the tutorial, and then I'm gonna just rush through the major currency pairs and show you guys a few trading opportunities along the way. So I don't want this video to be too long, so this tutorial is probably the most important thing that I want you guys to watch. So I'm looking at my chart right now, and I'm looking at Bitcoin. But I could have taken any other chart to talk to you about. So, but I'm gonna use this chart because this kind of illustrates the perfect point that I'm trying to make with this tutorial. So we're gonna break this chart down, and I'm gonna talk about the reason why. So first of all, I'm gonna tell you guys about three different traders. Yeah, the three different traders, and I'll show you guys, and you guys, hopefully you're gonna determine which trader you are in those three traders. So the first thing I'm gonna do is I'm gonna mark up this little area here. I'm gonna just draw a little box here, and I'm gonna just put a line here. Let's say so. So what you're gonna see is the fact that we had an impulse leg here, and we had a correction here, and then we have another impulse leg here. So this is the classic structure of a bullish market. So if you guys have learned from someone, any kind of trading educator out there on of reading the market structure, I'm sure I've made a video like this before. I can't really remember on how to read the structure of the market. So this is what you would have learned. You would have learned that the market, when the market makes a, an impulse leg, it gives you a correction or an outside return, and then it makes another impulse leg. So at this point, you can say you have a bullish structure. So if the market is gonna continue making bullish structures, that's how you find a bullish market. So for the market to continue making that move, because this is the starting point of a bullish market. So what the market usually does is going to come back to the previous structure resistance, which is now going to be support. So the market is going to come to this support level, and it's going to bounce back up, and it's going to keep going up, and now you have a bullish market. So what you would have learned, so I'm going to start off with the first trader first of all. So the first trader is, before I do that, I'm gonna just draw two lines here to kind of mark up a channel here. So this is like a little channel here. Yep. So the first trader is a trader who probably learned like how to read the market structure, or he learned this from some trader, either me or someone else on YouTube, on how to read market structure, and this is the first step on how you kind of predict, or how you kind of position yourself to take a trade. So the first trader would have learned that when the market comes back to the previous structure, which is resistance turns support. So obviously support and resistance is one of the very, very basic strategy. When you're learning how to trade, when you're a newbie, that's the strategy that probably everyone teaches you. So once the market comes back to the support level, this is where you place your trade, and eventually the market is going to go up and you're going to make some money, right? So this is what the first trader would have taken a trade here. Because look what we have here. So we had the market making this correction, setting up a new structure high, coming back to the previous structure, resistance. So this should act as a support. So the newbie trader will buy the market here, and obviously after buying the market here, now look, 2 or 3 times out of 10 this market is going to reverse on that support level. 3 times out of 10. It's never gonna be, it's never a high, you know, high rate, you know, it's not a successful strategy, in my opinion. But obviously people will tell you that, oh, this is the, you know, once you learn that, you will think, oh no, this is the way to make money in the Forex market. But if you do this, you're gonna go broke. You know, take it from an experience trader, someone who has been there, has done it. You guys can check my track record at the bottom of this this video. This is not gonna work for you. So if you're doing this in trading, you're not gonna make money long term. I mean, you might be lucky the first 1 or 2 trades or 3 trades that, you know, the market reverses on the dime and, you know, you end up making money. But this is not gonna make you money. But I don't blame you, because this is what you learn when you start learning how to trade. I mean, I did this at the start as well. When I was learning how to trade, I was really when I found out about this, I was like, wow, so this is how the market moves. I looked at a few examples, looked at a few charts, and I saw the market doing exactly that. I was like, okay, oh, this is a strategy. Let's go make money. And the one bad thing about this strategy, even if you're trading it, you know, you don't have a good risk to reward ratio. So you buy the market there, and this is going to be a stop loss, because it's going to have to go to on the previous structure, this previous structure, and this is supposed to be your target, or initial target if you would like. And look at that, what do you see here? Almost a 1-to-1 ratio. I mean, you do the math. You're taking a strategy which only works about 30% of the time and has a 1-to-1 risk to reward ratio. That's a recipe for disaster in the Forex market. This will blow your account, you know, within a month of trading. Okay, so let's go ahead and move on to the second trader. And mind you, the first trader is someone who's just learning how to trade. We have little experience in the Forex market. So we go on to the second trader. Let me go ahead and I don't need these anymore. So the second trader is the one who has had, excuse me, what's happening with my chart? Is not moving. Bear with me, guys. Just okay, something wrong. Chart is not moving. Okay, so I've managed to fix it. Obviously, I just had to refresh the page. So we're talking about the second trader now. So the second trader is the one that, you know, has a little bit more experience in the Forex market, and who has learned that, okay, so if the market comes back to the previous structure, you have to try and look for some kind of you know, signal confirmation in order to go long. And one of the common things that people will teach you is the fact that, you know, you try and look for the market to kind of give you like a higher high, higher close, somewhere in this region, and then you can kind of take the market, you know, go long in the market. Or they'll probably tell you, or you can use some kind of a RSI confirmation. You know, check the RSI. If the market is oversold, then you can, you know, look for the higher high confirmation and trade the market. So if you use the combination of those two, so basically looking for a market to give you a higher high, higher close, and then you look for an oversold condition on the RSI, then you slightly increase your success rate. So going from 30% to 20 to 30% on the first trader into about maybe 50-60%. And that is a good ratio. So what's the second trader gonna do here? So let's just look at this structure carefully. So the second trader is probably gonna look at this market and be like, okay, so where do I have a higher high, higher close? So look closely here. So you see there, right there, we see these 3 green candles. We got a higher high, higher close right there on the second green candle. So boom, this is my signal to buy. I'm gonna go long in this market. And just to give me an extra confirmation, I'm going to bring in my RSI. So we can look at the RSI and we can see, one thing you're going to see in the market, the RSI, is the fact that the first time that the market came into that structure, the RSI went oversold. So RSI went oversold, but then the market kept going down and the RSI kept going up. So bringing a line here just to draw, you can see here. So with a little bit of experience, you're gonna learn that this is what we call a bullish divergence. So while this is not, so basically a bullish divergence is something that does not reflect, that shows an opposite reading compared to what the market is doing. So the market keeps going down. The RSI is supposed to be going into oversold condition, but the RSI is coming up slowly from the oversold condition. It's not reflecting what the market is doing. So you got a divergence condition. So for the trader, the second trader who has a little experience in the Forex market, we'll look at this and okay, so I've got two confirmation here. I've got my RSI divergence on my RSI, and I've got higher high, higher close. So I'm gonna go long on the market. So the second trader is gonna go long here. But look what happened. After that, the market kind of went back down into that zone. Right? Previous support, the market came back and found a support here. So if you're trading like this, it's okay. I mean, you are gonna, you are gonna be better than the first trader because you've, obviously you've got more experience of using, a little bit of confirmation and, But what will the third trader do? So the third trader, and mind you, the first two traders are still gonna be in that 90% of traders who don't make money from the Forex market. Yes, I've been there before. I've had had to use confirmation to trade, and you're still not going to be successful. You're still not going to make money in the Forex market. So how do you make money in the Forex market? I hear people asking. So I'm going to show you what the third trader will do in this in a situation like this, because this is the elite level of trading. This is where people will focus more into reading of the structure, into more like kind of putting themselves in the zone where to actually take advantage of the market. And this is something you're not going to learn from any trading educator out there. You're only going to learn this from someone who has been there and has done it, someone who has a record to show that he can trade, someone who has been through the emotions and understands the language of the market. And I'm not talking about basic knowledge. This is more advanced knowledge of understanding every single move that the market makes and how to position yourself in a way to take advantage of that move. So this is what the third trader is going to do. So the third trader will take a trade from somewhere there. And you notice how the risk to reward ratio is changing. So if you're the first trader has a 1-to-1 risk to reward, the second trader probably has a 1.5 to 1 risk to reward ratio, and the third trader has a 2-to-1 risk to reward ratio. But his winning percentage is going to be around 70-80, while this one has a 50-60, this one has a 20-30%. So when you put those numbers together, you're going to see how the difference that this is going to make for your trading. Now obviously the first trader is not really gonna, even if he wins a lot of trades, he's not really gonna, it's only gonna take the third trader one win to make up. If the trader wins one trade, the third trader, the first trader needs to win like maybe 3 trades in order to be on the same level, 2 trades actually. So you can see what a difference that can make psychologically. I know people are saying, "Oh, just get and show us what the third trader does. How does the third trader trade this market?" Oh, I'm gonna get to you guys. Just calm down. I'm gonna get to it. So before I do that, I'm gonna flip over to the 1 hour time frame, and this is what I want to say though. Before I show you guys, this is what I want to say. Like when you're learning to trade, you're gonna come across different strategies on how to trade the market. But let me give you one secret, guys, that every single strategy that you're going to learn, just make an effort to learn as much strategy as you can. Because I'm telling you, this market, there's so many things, like so many trading strategies are kind of, you need to be able to combine strategy. I mean, if you're not combining strategy, then you need to be able to think like the other trader. So if you're trading a specific strategy, know the points at the market where the other trader is going to be placing their trade. Look for signs. It sounds really complicated, but guys, that's why you need knowledge in this. You can't be a successful trader if you don't have the knowledge. And I'll show you one of the things that a successful trader or a trader with more advanced knowledge is going to do. So looking at this market, first of all, I'm gonna take away this RSI. We've already seen the divergence on the RSI, so we don't need it anymore. We know there's a divergence when there's an oversold condition. I think we don't need it anymore. So this is where you know, when you look at you analyze every single pattern here. You analyze every single candlesticks. You tend to know what the market is kind of doing. So there's a strategy which I'm sure you guys know about, which is called the wave theory, Elliott wave, whatever strategy of, you know, that's one of the strategies that actually, you know, I've made an effort to learn last year, and that's one of the strategies I used for my FX books. I used just a part of the strategy, not all of it. Like I told you guys, I know a lot of strategies, but I try to combine a lot of them sometimes. So in that strategy, when a market makes a move, that's not a good line. So when a market makes an impulse leg, yep, it gives you some kind of correction. If you get a correction like this, 90% of the time the market is going to break to the upside. Same situation if the market is going down and it gives you a correction like this, 90% of the time it's going to go back down. But same with what I just told you guys. If you're a first trader, most of the time you're going to take this trade and you're likely going to be right a few times out of 10. 2 times, 3 times out of 10 you're going to be right, and you're going to make money on the trade. But we know what the market is. The market is not something that that you can just read something in a book and then come into the market and then straight away you're gonna make money from it. It doesn't work like that. It's just like you. I mean, we've all been in schools, like, you know, so you can remember back, you know, when you were in school, when your teacher gives you you know, an example or things in the class, and for example, if you're learning math and your teacher will tell you, oh, 2 plus 2 is 4, or 10 divided by 5 is 2, things like that. But when you go into the main examinations, when you go during exam times, you're never going to see those questions in an exam. Nobody's going to give you 2 plus 2 in an exam. They will twist it in a way that, you know, you're going to have to use your brain. They will give you like maybe something like 4 divided by 2 times 2, you know, I know, some kind of crazy things like that. It's still going to give you the same answer, but it's just going to mess with your brain. It's gonna play with your, like, I wouldn't really call it emotions, but it's gonna play with you. This is what this market will do to you. You know, it's gonna play. You have to be able to understand. You know, so, and the only way you can do that is you have to be able to study. You have to study it. You know, so the first trader will just buy it here, but I can tell you guys, you can look and go. You can go back when you finish watching this video, do some research on the charts in the market and try and look for any structure you see like this in the market. What you're gonna see is like at least 4 or 5 times out of 10, every time the market makes this structure and go back up, it always, I wouldn't say always, but most of the time it always comes back down to this previous low, tag the low, and then go back up, back down to that previous high, and then down. So if you don't know that, know this now. Like, I'm not even gonna try and persuade you to know it. Just go back, do your research, look at the market, analyze the charts, and that's what you're gonna see. This is important because when I'm explaining my next point, I'm gonna explain to you why it's important to combine strategies, why it's important to know a few strategies and be able to trade them effectively, right? Okay, so let's go back to the chart. So looking at this down movement here and analyzing every single move that the market is doing, if you look at this, what do you see? Down move, correction that I just showed you guys, market breaking to the downside, coming back up to the previous high, and then going back down. Right, like magic. A lot of people didn't even see that there, but this is why it's so important to pay attention to details. So now the second trader who doesn't have that much experience would have just gone long here and watched the market turn, and he'd be like, he'd be frustrated and say, "Wow, I've done everything that this, they told me to do. I've waited for the market to go. I've waited for the RSI for a bullish divergence on the RSI. I've waited for the higher close, and I still ended up. The market is still still end up going. It's going down. Like, during that moment, you're gonna be in a stressful situations, because as soon as you place, this is trading. Let's be honest, like every single time you place a trade, you're already in an emotional battle, because you always start at the red because of the spreads. And the longer that the market stays in red, the more uncomfortable you are going to get as a trader. I'm speaking to you guys from experience. So now you're going to panic. So even though you know that this market is going to go up, like, why am I panicking? Like, you are going to panic because you missed this. Because you don't know about this, you don't have enough knowledge to tell you that, okay, this is like, okay, I'm talking now, people are gonna say, oh, it's easier to say this when the market has already done it. But guys, let me take you back to my TradingView page. For those of you that don't follow me on TradingView, by the way, you don't know what you're missing out, because this look at what I've done on TradingView. This is a trade I posted on TradingView. That same trade that I'm looking at right now. What do you see here? This is a trader that understands the market. Short-term sell. Like, even though I know this market is gonna go back up, I know we're gonna get a short-term sell here. The market will break to the downside because of this structure that the market put there. So play the market. You can see the market came back down and broken down to the downside before it's finally going back up. So I'm not just saying this to you because the market doesn't know. I was in that mood. I saw every single move that the market was making there. I knew what the market was gonna do. So even though I know the market is gonna go up, I knew it wasn't ready to go up. It wasn't ready to go up. So while the trader 1 and trader 2 are there stressed out, like, when is this market gonna start going up? Trader 3, the more experienced trader, the more elite trader, is there waiting. No stress, just waiting, being patient for the market to give you exactly what you want the market to do. So finally the market comes back down here, and then you get a higher close. So higher close, followed by your the divergence on the RSI. So the same confirmation that trader 2 used, that's what trader 3 used as well. However, that slight edge that trader 3 has on this kind of structure, on the way the market moves, on knowing how to, understand how to use other strategy to incorporate into a simple basic strategy. More knowledge, more advantage. So trader 3 is absolutely stress-free in this situation. Buying from there, and look what the market is doing. So if trader 3 didn't get stopped out, trader 3 would be on break even. If trader 2 didn't get stopped out, trader 2 will be on just a little bit profit. And look at what trader 3 is, the more experienced trader. He can afford to move his stop loss to break even right now, because the market has put in a nice correction here. He can afford to make, but trader 1 can't do that. So he moves his stops to break even, and he's free from any emotions. He can just go about his day. I mean, he hasn't even been in any kind of situation where he had to kind of worry about the market. No. While trader 1 and trader 2 have been in constant worry ever since they placed the trade. Checking their phones, checking their screen every single minute. Trader 3 is out on the beach, drinking mojito or whatever. Trader 1 and 2 are there stressed. This is the experience, guys, that I want to show you. This is one of the edge you need in the market. If you don't have this edge, if you don't have the knowledge to be able to overcome all these obstacles, you're never going to make it as a trader. That's why it's always good to learn from someone who has actually been there and done it. I mean, I don't know how many trading educators on YouTube have actually, qualified to trade, to teach people how to trade, or have a successful track record of trading. I don't know how many. Definitely not more. No, the ones that I know of, I think there's only one that I know of. So you guys need to be careful who you go and try to learn from, to teach you how to trade. But anyway, so like I said, this has taken 24 minutes. I wasn't expecting to take 24 minutes. So anyway, I'm just gonna rush quickly and show you guys a few trading opportunities on the I mean, I was gonna talk more onto this, show you guys what the market is gonna do from here and forth, but I'm gonna leave that to you. If you want to see more of my analysis, just follow me on TradingView. I will be posting more lectures and more analysis on this. So moving on to Ripple. So Ripple right now, what I see on Ripple is, I wasn't expecting this correction to go deep. I was expecting the market to just give us a classic 1 2 3 correction, but this going deep, you know, there's a chance that Ripple is actually going to be forming an advanced pattern. So if you look at this move from here to here, we got a 618 retracement. So the Ripple is actually, there's a chance Ripple might be forming a bullish Gartley pattern. So if the market doesn't give you, so this is where you combine a strategy. So if this correction, if the market doesn't correct like this and move up, it's likely gonna come back down, complete the Gartley pattern here before going back up. So thinking like the other trader, you know, wave analysis, you know, correction, you know, flag pattern, you know, all those things. If the market makes that, you take the trade. If it doesn't, you know it's gonna come back and form an advanced pattern down here, a Gartley pattern, then you take it. So even the market forming a Gartley doesn't mean that you can just take a trade. You still have to use there's so many confirmation just to kind of minimize the emotions you go through in trading, because that's the number one thing that makes traders successful. If you can control your emotions, if you can minimize it, you have a better chance. But you need knowledge. You need knowledge. So that's what Ripple is going to do. So like I said, I'm just going to brush through this. Stellar, we're having the same outlook on Stellar as well. And delete that. We saw this move back down. So this is a 618 retracement. So the market is likely going to complete a Gartley pattern if it doesn't go off, because this is a correction. If it doesn't correct here like Ripple and go up, it's likely going to come back down, finish the Gartley pattern, and look for a sell setup. Wait for the confirmation. So people like me when I draw the Gartley pattern, so I'm going to draw it for you. I'm trying to rush because I don't really have to. I don't want this video to be too long for you guys. So I'm not sure we got the correction we need here to make it a Gartley pattern. Did we touch the 382 retracement? Did we touch it? Oh yeah, we did. We didn't touch the 50%. Yeah, so it is a Gartley pattern. So you got a Gartley pattern here. So but wait, if the market gives you correction, take the trade. We're going up. Euro dollar. Let me look at this on the 4-hour chart and see what the market is doing. So at least it looks like we're just going up in a sideways, you know, sideways channel. You can see it here. There's no really, you know, 1 2 3 4 5. The market has already made a 5-wave correction, so expect this market to give you a correction here before it continues down. Or let me show you another scenario. The market can give you a correction here, it can come down, go back up, test that high, and then market goes back down. Or it can give you the correction. I don't think we have an advanced pattern forming there. No, we don't have an advanced pattern, so just keep an eye on that. Like I said, I'm rushing through all this. I don't want to go details because, you know, I can do so many detailed analysis for you guys, but it's not really important. You know, the most important thing in trading is actually being able to, you know, it's the part where you place a trade, the things that you do before you know, the final confirmations that you do before you place a trade. That's the most important things. The things that you look for, how you position yourself, how you kind of, you know or understand market structure and things like that. Those are really important. So US oil, for example, we got US oil. This is a structure that is gonna go up. If you understand market structure, the structure is gonna go up. We've actually completed a shack pattern on this. I posted this on my trading view, this shack pattern. So we got that there, we completed a shack pattern somewhere there, and actually posted it on my trading view. So it's just a matter of time before the market goes back up from there. Just a matter of time. You can pay close attention to that. Pound, we are making, well, we had a really huge, you can see that this is a very big impulse leg to the downside, so this market will make a correction here. So we're already having a we're having a slide. So if the market comes back slowly here, what's going to happen here is going to complete an advanced pattern somewhere that you're going to get a Gartley pattern. So this Gartley pattern is going to be a winner 100% because this market is completing a 1 2 3 color. So 1 2 3 is going to break that top before the market comes back down. So this Gartley pattern is going to, this is one of the reasons, this is, if you know, that's why if you can combine advanced patterns, if you can combine strategies, the advantage you're going to have is very, it's so good. Because this is the Gartley pattern that is going to be a winner 100%. If it completes, if the market doesn't go back from here, it's going to be a winner. So moving on. If it completes, I'll post that on my trading view as well. Moving on to the CAD, US dollar CAD. I think I don't know, but we are waiting for this market to complete a crab pattern here, somewhere at the bottom here. But looks like the market is giving it's giving you a correction here. So wait for this. You know, it's like you're gonna make a correction. So wait, just look for a sell setup. But I think we're gonna get probably a classic 1 2 3 correction, and then we'd head over down to complete that pattern. So what is it? Crab pattern, yeah. So Aussie dollar, I think, oh, this is from my analysis last week. So if you guys have seen my analysis last week on this one, I left you with the bearish Gartley pattern here, and you can see the Gartley pattern completed and the market is going back down. Why? Because this was on a downtrend. The market is on a downtrend channel, and this whole structure is a structure that is going to go up. So you find a guy, you see a bearish guy, that the structure is going to go down. Sorry, excuse me. This is a sell setup. So you see a bearish Gartley pattern in a sell setup. It's no brainer. It's going to be a winning trade 100%. This is the last one I'm going to do. New Zealand dollar. New Zealand dollar is going up. We know it's going up because it's in this, bringing the daily, yeah, it's in this consolidation. So the market, this is not a full correction. We got the move here. This is 1 2. The market will come back to that previous high. So look for any buy setups on the New Zealand dollar. So that's it, guys. I mean, I'm gonna stop here because, like I said, I'm already 30 minutes into the video. But I want to thank you guys for watching, and as always, guys, feel free to please subscribe to the channel. Like, comment, and anything that that you do is really helpful. And don't forget to check out my website as well for those people that are learning. If you're looking to learn how to trade, I mean, I'm gonna put more courses on my website, but so far I've only got the advanced pattern and the forex trading for beginners, and it's always gonna be one-to-one lessons. So you're gonna have me one-to-one teaching you over Skype, and you get the chance to, any questions you have, you ask me any questions, answer any of your questions. And and also, if you want to join my trading group, which you get free for the first month, where I post lots of different strategies, so you can see all the strategies that I trade. Those are the kind of strategies I post on my, so just come and check it out. If you don't like it, you don't like it. It is what it is. But yeah, so that's all for now, man. Thank you guys for watching, and I hope you have a great week in trading next week. So thank you.